Hi there traders, this is Chris from Elite Currency with another video looking at the euro dollar and pound dollar. Alright, let's start with the euro dollar 1 hour chart. Yesterday I was leaning towards a bullish continuation. I know that apparently a lot of traders were still bearish. I leaned towards a bullish continuation because of the momentum that we saw in the market, and I just want to show you the SWOT candle so you can see why I was expecting a continuation. Good break above the 21 EMA, and I was indicating that any kind of re-break below it I don't think was worth shorting, but a continuation higher could be possible. So the SWOT software shows the re-break here with the blue candles above the 21 EMA, indeed going for a continuation of about 60 pips. Now it didn't go all too far, so I have to say that the momentum is kind of slowing down, I think, and we are seeing a potential correction, and the price action itself is looking more and more like an ABC, right? We have a thrust, sideways correction, and one more, and there's clear divergence between the first top and the second top. Now, let's zoom out and take a look at the 4 hour chart and daily chart. Trend is still down. Okay, we had 3 bullish candles though in a row on the daily chart, so I think that could be an indication of a bigger correction to the upside. HMA is turning up as well, so if price would go back into a downtrend, price would definitely need to re-break below the HMA like it did on this candle, for instance, all right, or perhaps even here, in my view. So I think that the bulls still are more in control at this point, despite the downtrend, and just based on the simple momentum of these daily candles and the HMA pointing up, and the double bottom as well. We have a fractal now at the double bottom. The fractals are indicating downtrend, yes. But I don't think we can ignore the other clues as well. So it is a mixed position. It is not an easy spot, I think. I don't think it's that clear necessarily, but leaning towards a continuation higher based on this daily chart at the moment. Okay, let's take a look at the 4 hour chart. But as I said, it's a very vulnerable spot. Euro dollar, I think, just hit the R1. So it could go back down to the weekly pivot point, it could go back down to the S1, and I think those could be bouncing spots for upside, and price could go up to the R2 and perhaps the previous top, because if we zoom out just a little bit, you can see that it could also be a sideways correction, A, B, C, and C could go up to around the R2/11840. That could be a resistance zone where price might stop. If it breaks above this resistance zone, then I would expect a lot more upside potential. In that case, I'm going to put a fib from here to here. And, if it breaks above 118-ish and 118.50, it could go to 119 and then up to 120, 120.30. All right, to go up against or retrace back towards these fib levels. And we could see a bigger retracement. In that case, I think that this could be a completed wave A and we can go up for a wave B. Still too soon to tell about that though. At the moment, analyzing whether price will indeed bounce here for this move up within this kind of sideways range. Now, if that doesn't happen, let me show you a different template. If that doesn't happen, if price, for me, to be back into the bearish mode, I would probably need to see price. This break is not that interesting for me because I think it's heading back to support. But what I would need to see is price fall strongly like this, make a sideways correction, a flag like that, and then re-break below the 21 EMAs. And then, yes, I think there could be a continuation lower like that. All right, maybe be careful of this bottom still, but that's possible. Or if it breaks below 115, I would also, again, be more bearish. Specifically, if it, of course, breaks below the HMA and we see a full kind of, or half a candle at least below that, like we had here, yes, that would change things. But for the moment, we see a blue arrow, we see bullish candles. So what I'm expecting rather is for price to, let me get rid of this template, is for price to show some choppy correction here and bounce at support for and move up towards this resistance. All right, that's my view. Let's see if that happens. Pound dollar is more or less the same. Well, it didn't have a higher high, but it could be building still an ABC correction. Overall, this is pretty corrective price action in this spot. More importantly, perhaps, is the fact that we had pretty strong divergence between these bottoms, right? take a look at this momentum, take a look at this momentum to the downside. These bearish bars are very small compared to these. So momentum is dying. I think it is slowing down, and I think that daily divergence is not something we want to ignore. I think that that could lead to towards a bigger ABC correction. In fact, when you have divergence, you should expect, that's our rule of thumb, for price to go back to the long-term moving average. So I would expect price to eventually get back to here. That's my expectation at this moment. The roadmap that I think could occur, the path of least resistance. Let's put a fib from the very top to the very bottom, and you can see it also matches a 38.2 fib. So for the moment, I think price could make a dip, but ultimately I think it'll go up to the 23.6 fib, then make another retracement, and then ultimately move up to the 38.2 fib as it then breaks above the 21 EMA here. All right, so this is the path of least resistance that I'm expecting based on price action, moving averages, and the SWOT methodology. So when we zoom into the 4-hour chart, you can see that for me, this downside is not that interesting. I think it is probably going to be an ABC, and I would expect to bounce up. And a rebreak above the 21 EMA on the 4-hour chart could offer that counter trend trade up to the 23.6 fib, and then after a dip up to the 38.2 fib. On a hourly chart, I have nothing really to add, except that perhaps the weekly pivot points could play a role. If it doesn't move down, it's not guaranteed that it will make an ABC necessarily. I just said if it does, I'll be interested in looking for the bounce. But if it doesn't, because it is still above the 21 EMA zone, that's why we like to use these methods and tools so we have better understanding of what's going on. So if it continues higher, it is not with the trend setup, but there could be a counter trend continuation trade if it breaks above these fractals. That's a dangerous one a little bit in a way because of the counter trend direction. Obviously, that's the same if price would dip and bounce. All of it is counter trend, but I think that there are decent clues for that potential. Now, it would be different, of course, if price breaks below this bottom, which is the invalidation level of such a reversal or retracement at 131. All right, but the main target's up in here, 23.6, 38.2. It could go even deeper if this is a wave 1 and we're in a wave 2 here. Then the 38.2 fib doesn't have to be the end target, but that's something for later and in a video of the future. All right, that's it for now. If you like how I analyze the charts, of course, feel free to take a look at ECS SWOT. It basically explains how to use our software and explains our vision and methods regarding simple wave analysis and specifically more focused on patterns, so pattern trading, and explains how you can do that with SWOT. Of course, we have also free analysis at elitecurrencies.com, and above all, wish you all great trading. Cheers.